Welcome to the second part. So here in the first part, we calculated gross profit, which is $40,350. Okay. So in the second part, we will calculate profit for the year or loss for the year in the profit and loss account. Okay. So here, before we start, let us have a look at the question. So here we have revenue, sales return, purchase. These all three we have taken in the first section. Then we have here rent and rates, we'll take it, wages, we'll take it, general expenses, we'll take it, insurance, we will take it here, discount receipt, it is an income, we will take it here, inventory, we don't have to take, it is taken in the trading account section. Fixtures and equipment, it is an asset, it will come in the balance sheet. Fixtures and fittings, provision for depreciation, this will appear here. Okay. And then a trade receivable we will not take, it is an asset. Trade payables, it is a liability, it will go to the balance sheet. Provision for doubtful debts, we will take it. Cash drawings, it will appear in the capital account. In the next tutorial, I will show you how to prepare capital account as well. Capital at 1st April 2021, this will be also taken in the capital account. Okay. So at the end of the question, we have 7 adjustments. So we will adjust these adjustments here with the ledger account balances. Okay. So here already we have gross profit. Now we will add all the incomes with the gross profit. Okay. What types of income will be available in the sole traders? So there might be discount receipt, commission receipt, rent receipt, interest receipt. Okay. Here on this question we have only one item, which is discount receipt. Okay, it is an income. We will add this income with the gross profit. Then with the addition of these two items, we will subtract all the expenses to calculate our profit for the year or loss for the year. Okay, so let us write here first item. So we will write here add or plus, whatever you prefer, discount receipt. So we have on the question 1095, right? Okay. So now if we add these two amounts, we get $41,445. Okay. Now from this amount, we will subtract all the expenses. First of all, we need to know what are our expenses to be included in the profit and loss account section. Okay. So let us write here minus or less expenses. Okay, so what are our expenses? Our first expense in the question is rent and rates. It is on the question $9,000. Okay, so we have an adjustment with this amount. Let us have a look at this. Look at number 5. Rent includes a payment of $1,500 for 3 months from 1st March 2022 to 31st May 2022. Okay. So here we are doing this account for the year ended 31st March 2022. This $1,500 is paid for 3 months. Okay. 1st March 2022 to 31st May 2022. Okay, so 1st March. So March is paid, it is not advance, but April and May, these 2 months paid in advance. So we need to calculate these 2 months rent, okay, as it is paid in advance, and we have to subtract from this amount. Okay, so here this $1,500 paid for 3 months. Okay, and we know advance payment is for 2 months, April and May. So March is not advance. Okay, March is in the accounting period. Okay, so here we will multiply by 2. Okay, so what you get here? We get here $1,000. This amount is paid in advance. Okay, so we will subtract this amount from $9,000. Okay, so let us write here minus $1,000. So if we subtract, we get here $8,000. Okay, great. Then we have our next item, next expense is here wages. So we have here $10,100. Okay, so same, we have an adjustment. Let us have a look at there. So here number 4, accrued wages at 31st March 2022 were $800. Accrued, unpaid, area, outstanding, due, owing. If you see these 6 words, you will think that you need to add this amount with the relevant expense. Okay, these all 6 words mean same, but different times you will get the different terms. Okay, so here we have to add $800. So now if we add up, we get here $10,900. Okay, so on the question, our next expense is general expenses. So it has no adjustment, so we will write directly here 1,287. Okay, so next expense is here insurance. So same thing, it has no adjustment, so we will write here directly $1,800. Okay, so we have no more expenses in the question. Okay, now we have some adjustments we need to write here. Okay, so let us have a look at number 6. An irrecoverable trade receivable, $200, is to be written off. Okay, so it is an expense. This money cannot be recovered from the trade receivable. Okay, so that's why we need to write here. Okay, so let us write here irrecoverable debts. Okay, so it is $200. It is our expense. Okay, business cannot recover this amount. Okay, then we have one more adjustment. Number 7, the provision for doubtful debts is to be set at 3% of trade receivables. Okay, so now we need to calculate provision for doubtful debts. So this is also an expense, so we need to write it here. Okay, so let us write provision for doubtful debts. Okay, so we need to calculate 3% on trade receivables. Okay, so $6,400. So from this amount, already business decided 200 is written off. Okay, this amount cannot be recovered. Okay, so we have to subtract this amount first of all. Okay, so let us minus it. So here if we subtract, we get $6,200. Okay, now we will multiply by 3% to calculate the provision for doubtful debts. Okay, so right here 3%. So if we multiply here, if we do calculation, we get $186. Okay, this is the provision for doubtful debts. So let us write here this amount 186. Now you might be thinking why I wrote this expense here in this first column, because all expenses we wrote on the second column. Yes, we have one more provision for doubtful debts in the question. Okay, so here we have provision for doubtful debts $156. Okay, this is the ledger account balances. So this $156 we need to subtract from this amount. Okay, 186. Okay, so we will write here less old balance. So here we have 156. We will subtract this amount and we will write here $30. Okay, so great. Now we have last adjustment. So let us have a look at there. So number 3, we have here depreciation on fixtures and equipment is to be charged at 20% per annum using the reducing balance method. Okay, so reducing balance method, this is a bit complicated to many students. So if you are confused about depreciation account, you can check out my channel because I have so many videos on this topic. Okay, so here balance reducing method, what does it mean? It means that previous year provision for for depreciation, you need to subtract from the cost of the asset, okay, non-current asset, to calculate the net book value. And if you multiply the rate of depreciation by the net book value, you will be able to calculate the present year, current year depreciation, okay. So here, first of all, we have to know our net book value. So what is the cost price here on the question? We have here fixture and equipment, we have here $80,000, okay. This is the cost. And in the question we have provision for depreciation, which is $39,040, okay. So we will subtract this amount from the cost price to calculate the net book value, okay. So here if we subtract, we get 40,960, okay. So this is the net book value of fixtures and equipment. Now if you multiply the rate of depreciation, which is 20%, then what you get? So let us multiply by 20%. So if we multiply, we get $8,192, okay. This is how you need to calculate depreciation if you have balance reducing method. Once again, this is an expense, okay. So we will write it here. So let us write depreciation. So here it is fixture and equipments, right? Okay, we calculated $8,192. Great, we wrote all the expenses, we adjusted all the additional informations with this relevant expenses. Now we will calculate. So now if we add this all 7 amounts, what we get? We get here $30,409, okay. This is the total expense, okay. Now we know total incomes minus expenses will be the profit for the year, yeah. So our expense is less than income, so we will have here profit for the year, okay. So let us subtract 30,409 from 41,445. So if we subtract, we get here 11,036, okay. So this is our profit for the year. So let us write here profit for the, okay. So this is how you need to prepare profit and loss account for the sole traders.